Moolala is brought to you by the nonprofit credit counseling agency Credit Canada. Taking care of your health is important. Yes, it's important for quality of life, but it's also important financially, right? It's important to be healthy because you want to be able to work and live and all that. Taking care of your health, though, can also be very expensive if you don't have benefits coverage. And of course, not everybody does, or at least not across the spectrum of services they might need. Everyday People Financial Corp is a Canadian-based financial technology and consumer financing company, and they have expanded their EP Care program to more dental clinics across Canada. So we're going to talk about this. Like, what is healthcare? What is health and wellness financing? How does it work? Taylor Inglis is Senior Vice President at EP Care. He joins us today from Edmonton, Alberta. Hello there.
Hey, Bruce. How are you?
I have a 13-year-old. They have braces. I do not have benefits coverage, so we are paying for them over the course of the treatment period. Is that a simple example of what you're talking about when you talk about healthcare financing or health and wellness financing?
Yes, that would be a very simple example of it. But we offer more than just orthodontic coverage. We do general practitioners and specialists as well. In full mouth implants or dentures. The orthodontic space, we have oral surgeon actually within the program as well. And we've even expanded out into the veterinarian space.
Really? And in the vet space, that would mean that if your pet needs a significant procedure that you can't just put on a credit card, you could get financing for that.
That's correct, yeah.
How does this program work?
So, well, first, Bruce, my wife is a dentist, and she came home frustrated one day that she had to complete a procedure on an individual, which would actually end up with him receiving lower quality of oral health treatment because they couldn't afford what should have been the optimal treatment. So she came home frustrated and she said, Taylor, you're in finance. What can we do here? So we built a platform that effectively allows clinics and doctors to offer their own in-house patient payment plans. So us being a financial technology company, we partner with these clinics. We create marketing collateral. We plug in on their website. We have QR codes and marketing collateral sitting in their operatories. And the individual, if they need anything from a $300 up to a $50,000 treatment, can scan the QR code in the clinic or apply online in advance of their appointment. And we go through an adjudication process. And by adjudication, what I mean is we look at certain approval criteria based off of the application. We are a little bit different than traditional financing companies. We base off our adjudication, our approvals off of cash flow and the patient's ability to pay. So what we do is we have the application come in, we send them a link to a third-party bank verification software, similar to what you would use if you logged into the government website, for example. And from that, we get transaction data so we can understand and qualify their income versus their expenses and understand what their free cash flow is on a monthly basis.
That is a rare approach compared to how most financing works, which is credit score oriented. Why a cash flow approach?
Well, we do look at credit scores. We do a soft pull on our applicants, but we also know from our experience that the credit score and the credit history isn't always a really good representation of somebody's financial capability, right? Individuals have had dings on their credit and their record may reflect that, and therefore they may have a lower score and they may not qualify for some of the other third-party lenders that are out there. And so what we do, and just because, again, I built this for my wife's clinics and she's a partner in a multi-clinic practice here in Edmonton, we wanted this to be as consumer-friendly, as patient-friendly as possible. So, we took a bit of a different approach based off of our, track record and our history of adjudication and understanding, individual credit and credit needs from patients.
Now, with a traditional loan, if a client does not pay, you can repo their car or you can, sell off the debt to a collection agency. If someone in this context doesn't pay, do you come and yank their braces out of their face?
No, unfortunately, that's not an option for us. We don't securitize our loans or our payment plans with their infrastructure, so their braces. However, we do have a call center that operates 6 days a week for 14 hours a day here in Edmonton. So for the first, say, 120 days of their delinquency, we work with them to try and get them caught up on their payments and make sure that they can make affordable payments and not suffer in their own personal lives financially. Now, if they go beyond 120 days, EP Financial actually owns collections agencies here in Canada. So we offer a full suite of in-house adjudication, management, remittance back to the clinics every month. And then if it does go into a situation where collections are required, that again is all an internal process for us here. Now, we don't repo cars. However, we do report to the bureaus, and so there is impact on their credit history.
What's the interest rate?
The effective interest rate, or the APR, is 6.6%. We marketed that as an 11.99% annual interest rate, but it's calculated as simple interest on a declining balance, and we calculate it daily. So over the course of a 12-month term, the effective interest rate is 6.6%. And there are no penalties, there are no changes to that. If there are missed payments or they are delinquent, we don't increase that rate, right? And we do that very intentionally to make it so that, again, this is a very consumer and patient-friendly financial product.
And certainly that is a big discount for someone who would otherwise be putting this on a credit card and having to pay that outstanding balance off over time. Maybe less competitive versus a line of credit, especially one that's secured. Where are you aiming for competitively?
Well, we want it to be the lowest cost provider for healthcare financing in the market. You are obviously familiar with the interest rate situation that's taking place currently in Canada. We're hopeful that rates are going to steady and not continue to rise over the next, call it 6 to 12 months. But ultimately, where we position ourselves is the lowest cost healthcare provider in the country.
Where does financing not make sense? And maybe you have other examples here. I can see for someone who needs an emergency root canal, like, okay, you got to do this. But others who are looking for something that might be cosmetic, like, whitening or braces for a cosmetic reason versus, for something that you would do for a kid. How do you think that through?
Well, honestly, it really depends on the individual person's financial situation and financial health. If they can afford to pay out of pocket, a $6,500 invoice for Invisalign or for braces like you've referenced, then, maybe that makes sense for them. If they do have another demand for their capital and they have got a limited income, or like most Canadians are, living paycheck to paycheck. About 53% of Canadians are currently living paycheck to paycheck. So there's not a lot of options for people out there, right?
Who provides the capital that you then lend?
So this is what makes our model unique, Bruce, is by allowing the clinics to offer their own in-house patient payment plans. We don't actually pay the clinics out up front within the first 48 hours. And that also allows us to keep our interest rates as low as they are. What we do is we set the payment plan either monthly or bi-month or bi-weekly, and we collect and we just remit back to the clinic on a monthly basis.
So that's a very big difference versus financing of something that has a significant upfront cost. You need a fair amount of capital to underwrite that.
Correct.
How does your relationship with the dentists work in terms of the dollars? So are they paid a referral fee to send someone to you, or how does that work?
No. The doctors have a patient that has a need. So your example of an emergency root canal is a great example. And that's actually the case that drove this. Is an individual came to my wife and needed an emergency root canal on one of their molars, so one of their big teeth in the back that you used to eat and chew with. Unfortunately, the $2,500 bill to get the root canal in the crown was out of reach for this person, so they had to end up pulling this tooth. What that means is this individual is going to be chewing on their front teeth for the number of years, and over a period of time will unfortunately grind those teeth down, and will need a full mouth implant case or dentures at some point in the next, call it 15 years. So for a preventative case like that, where we can put them on an affordable monthly payment plan over 12 months, the doctor then gets their annual billing. And so instead of charging the patient $350 to pull a tooth, they end up, billing $2,000. And instead of giving suboptimal care to their patient, the patient ends up receiving the optimal care. And then sort of everybody wins in this scenario. And that's really what drove this platform is we wanted to get creative and create a structure that allowed everybody to benefit.
We're seeing consumer financing in so many different areas, like contractors can offer it through Finance It. There's a lot of models out there that there weren't 5 years ago. But with dental, when I went to the ortho for braces, they offered me a payment plan, but it was a payment plan. I wasn't borrowing. How is that structured differently?
Well, it would be very similar to what we're offering. Now, orthodontists, because their average treatment is quite high and braces are not cheap, typically they've been offering in-house financing for some time. This isn't a new thing for them. However, what they don't offer is proper adjudication or proper application criteria, right? They'll look to anybody to say, okay, you're a patient of ours and we can offer you this. But to your point earlier, if they do go delinquent or go beyond delinquent and into collections, there's not a lot of recourse there for these clinics because they don't have the ability to report into the credit bureaus, right? This is an in-house financing tool, where ours is a sort of in-house but third party, and we do the proper adjudication, the proper management, the proper remittances every month, and then if they do unfortunately go delinquent, then we have the ability to engage with our collections division.
Right. Interesting. Taylor, thanks for your time today.
Absolutely, Bruce. Thanks for having me.
Taylor Inglis, Senior EVP at EP Care. He was here to talk about health and wellness financing and how maybe you could borrow for braces.